guys, and welcome to really one of my favorite videos because it answers the question that everybody wants to know: how we make money. In this lesson, you'll learn about foreign exchange rates, fluctuations, supply and demand, the US dollar compared to other countries, and the foreign exchange market compared to other markets. Definitely take notes and use the list of bullet points to help guide you through this lesson. So, most people don't know this, but you already participated in the foreign exchange market. Like, if you've ever traveled to a different country and had to exchange your money, or if you've ever had a bank account, you've participated in the foreign exchange market. Also, if you're an entrepreneur and you buy goods and services from other countries, you definitely participate in e-commerce, which means that you participate in the foreign exchange market. So in the foreign exchange market, you have foreign exchange rates. These are the rates that buyers pay in order to exchange their currency for a different currency, and it changes by a daily, minute by minute, second by second basis. Now, as a trader, you're looking to make money off of the difference between these exchange rates. So when you trade, you know the currency is either going to go up or down, and these values fluctuate on a daily basis. You're looking to make money off of that fluctuation. So I'm going to give you a quick example using the US dollar against the Great British Pound and the actual exchange rate. Let's say that I have the Great British Pound and it's worth $1, and the transition is worth $1.50. That means for every 50 cents I have in Great British Pound, I can actually get $1 in the US. That's only good if you're coming from London, because that means if I have 50 cents in my pocket in London, then I'm actually going to be able to get $1.50 in the United States. So what I have is a lot more buying power. But if I was trying to go from the United States to Britain on vacation and had $20 in my pocket, I'm coming from the US to London, and that means I will only have $10 to spend in London. This is because I had to pay that difference in that exchange rate. As a trader, supply and demand are imperative. Let's say you want to buy something and it's high in demand. This means that you have to command a higher price. However, if the market's saturated with that product and the demand is going to be low, then that's going to be a reflection of not being able to get a very high price. So how does this influence you in trading? Let's say you come from a country that has a high demand currency. This means that a lot of people are trying to get their hands on it all at the same time. Unless you come from a country that has a low demand currency, which is literally everywhere because of inflation, when you go from a high demand currency or a high demand country to a low demand country, then you're going to have a lot more buying power in that country. A perfect example of this is, let's say you take the United States dollar, for instance. When I went to Thailand, I had a lot more buying power in that country. I could literally buy whatever it is that I wanted. If I wanted to buy a house or go shopping, I had a lot more buying power because the value of the US dollar compared to the Thai baht is way greater. However, again, if I tried to go to London, it would be a different story because the US dollar has been dropping and the pound is currently higher in value than the US dollar at this time. Now, the Forex market is so important because it's very significant in comparison to other markets. When we look at other financial markets around the world, such as the New York Stock Exchange, the Tokyo Stock Exchange, the London Stock Exchange, and cryptocurrency exchange, the average daily trading volume and how much is being exchanged back on a daily basis, the London Stock Exchange is about $7 billion per day, which means the flow of money is $7.2 billion every single day. The Tokyo is $18 billion, the New York Stock Exchange is $22 billion, and the cryptocurrency is $17 billion. But the foreign exchange market averages $5 trillion per day, leaving an endless amount of possibilities to gain revenue, but only with a skill set, which is why you are here. So you should know by now the basis of the foreign exchange rates, the fluctuations, how supply and demand affects the market, US dollar compared to other countries, and the Forex market compared to other markets, which is essentially the bread and butter of the financial asset classes. This concludes our training on how we make money, and I will see you guys on the next video.